This is Make Money Count, brought to you by Cannect Home Financing. Gentlemen, good afternoon. Welcome in.
Hello, hello.
Hello,
Ian,
hello.
What is happening?
How are
Ian?
you?
We want to tell you about something quickly.
Okay, I want to tell you about something too, but you're the boss, so you go first.
Okay. Only here, actually, by the way, I get to be the boss.
No, there's nothing but respect. Matthew told me that.
So we've got what do you call it? Like a poll right now up on the Instagram stories.
Oh, I thought Matthew was dancing.
Not yet. And on the poll, it's who looks more handsome today, Justin or me?
Oh, dear Lord.
Right now.
And unfortunately, clearly, Instagram, I didn't know this, but Instagram can be used by blind people because Justin's winning.
Nice.
I didn't know there's a Braille Instagram.
Do I have a vote?
I hope so.
Can you see us right now?
Okay. Not right now, but I'm certainly going to tune in fast to see. I don't like to start the show on a negative note, but I got a complaint, and normally I would just kind of shove these off, but I think this one's worth addressing.
Nice.
So, here we go.
Is it my mom complaining that Justin is appearing more handsome than me?
No,
Okay.
apparently not. I don't want to start so serious, but let's get this out of the way.
Let's do it.
It's from the Justin Turner Fan Appreciation Society Facebook group and bait store up in Peterborough, Ontario. And they unfortunately took serious umbrage at the fact that they didn't think that you were treating him with the respect that he was due on last Sunday's show, as he's racing down, the highway, pulling over to the side every once in a while to text us and make sure that we're appraised of his location.
Well, you know what they can do, right? You know what they can do?
Yes, I do, as a matter of fact.
They can get in the damn line.
I'm a good driver. Let's get that out of the way. All right?
Yeah, okay. There you go. And if he says it, it must be true.
Right.
Yeah.
You
heard it on radio.
Back in studio. That's right. Yes, it happened. Therefore, it's got to be real. Nice to have you back, Mr. Justin.
Says who?
Welcome in.
The band's back
Says me.
together.
Says the listeners, and apparently, no offense, Marcus, says Instagram.
Wow, jeez.
Oh,
It stings.
yeah.
All right, see you later, guys. Let's watch you three guys that know very little about this do this show.
Yes. Yeah, you see, but I have a benefit over those guys in that I just open my mouth and talk whether I know or not. So, we're all in trouble. It'll be an interesting show as we just give away free mortgages. You get a mortgage, and you get a mortgage.
Everybody look under your seat.
We're doing a show. yeah, that can backfire so bad depending on your audience. We're calling this show Back to the Basics. I think it's a great idea because we've been doing a lot of these shows week in and week out. And especially for some reason, there's two areas. One that I do these shows in, financial, obviously. And the other one's my outside world, which is kind of computers and programming and engineering and stuff. And in both those areas, I bet you we could talk for an hour and never actually use a word. Well, the 2514 on the CRV is, plus or minus, but the QVR. And we get the audience coming along with us, and eventually, they just don't understand the terms, they don't understand what we're talking about, and they kind of just glaze over. So we thought maybe a back to the basics show where we just start at square one. We'll talk about the reasons why you should use a mortgage broker. And so, if you are listening out there, or if you know anyone even better who probably should be talking to Connect, give them a shout, tell them to tune in, or they can obviously listen to the podcast later. But so this show is really going to be a back to basics explanation of what happens out there.
Mm-hmm.
And if you call into the show this week, we will give you tickets to be part of our live studio audience here next week.
Oh, dear Lord. And the number to call in for that participation is 416-872-1010, 416-872-1010. Apparently, the Justin's Facebook Appreciation Society organizing a coach from Peterborough. And so if you do end up on the winning list, then you can have easy access to get to Toronto. I'm going to regret saying that.
Line passes.
There's going to be a listener out there. I thought that you said somebody on CFRB said that they're going to run a coach from Peterborough.
No, but really, listen, what makes the show is the calls, right? Like it's like as great as Justin is on the show, the the best way to get information out there is when, people call in and ask questions, because
and as good an example of that was the very first call we ever had on this show, as a matter of fact, and I won't forget it because she really came in, and it was a perfect example of someone who thought that she knew what her options were. She thought she knew what her scenario was, and talked to you both for 5 minutes and realized that there were a ton of options there for her to consider.
Yeah.
Mm-hmm.
So back to basics. One of the, I guess the basic question would be, guys, what is a mortgage broker?
Yeah, so a mortgage broker, in my mind, is someone that's on your side, that's rooting for you in the transaction of your mortgage, and not only just in the transaction of your mortgage, but every step of the way along the life of your mortgage, right? Whether it's time to save money or time to refinance, or time to add that addition or that swimming pool. The mortgage broker, their job does not stop at facilitating the mortgage that you have today, right? Their job continues along the life of your mortgage to make sure that you are getting the best information and knowing when it's time to do what in terms of your mortgage. I would say, yeah, that would be my definition.
I think it's great. I think the more informed your mortgage broker is, so the more aware they are of all the products that are out there, the better they're going to be able to serve you. The more information they have on your particular circumstances, the better able they're going to be to serve you. There are a couple things that I really wanted to bring up today. I've got them like queued up. I'm going to put on the screen so that if you do watch our TV show Saturday mornings at 8:30 on CHCH TV, you'll be able to see these. And they're really powerful, and they speak directly towards the power that mortgage brokers have in helping Canadians deal with their mortgages. So Matt, you want to give me access to this screen? I'm going to put one up right now. So the Bank of Canada produced a report in 2006, I believe this report is from. And we've referenced it quite a bit in the shows so far. So I wanted to put it up so that we could look at it together. The one conclusion of this report, and it's a 49-page report that they produced. It says the main results of this paper are the following. And it speaks to the ways Canadians can receive the best rate on their mortgage. One point here, which really surprised me, it didn't surprise me that it's the case. It surprised me that it was produced in this report. It says the number 3 result of this paper is that they have identified that banks discriminate customers based on their loyalty, which means that based on the number of financial products you have with a bank, your mortgage rate will be higher. The greater loyalty you have to your financial institution, the more of an interest rate you're going to pay. There are some other things here that will make people upset, like, which we can kind of anticipate because of risk, but that higher income households pay less for their mortgage than lower income households. And those households that have financial constraints, even though they qualify for a mortgage, will typically pay more for their mortgage. And then finally, and this one's my favorite, borrowers that use mortgage brokers always pay lower rates. Now, this isn't a mortgage broker that wrote this. I'll scroll all the way to the top of this massive piece that was done by the Bank of Canada. This is the Bank of Canada. This is an unbiased review of the Canadian mortgage market and discounting. It's called Discounting in Mortgage Markets. Oh, sorry, it's from 2011. But the data goes up to 2006. And I can tell you that because I'm going to show you this little chart here. So this is another chart, Ian, I've got up on the screen. And it is 2 graphs next to each other. The one graph on the left-hand side shows the increase in mortgage discounting in the Canadian mortgage market. So basically, the reduction in mortgage rates for Canadians that took place from 1997 until 2004. and it shows just an absolute hockey stick, like straight up to the top right, mortgage discounting going from 1% to almost 2.5%. Just a huge increase in mortgage rate discounting. That means Canadians were getting more and more competitive prices on their mortgages from about 1996 all the way to 2004, 2005. Like just every year over year, massive increases in the discounts Canadians were receiving. And then right next to it, I plotted another graph, and I pulled both of these from the same report, and it shows the increase in Canadians who used mortgage brokers from 1997 until 2005. And guess what? It looks exactly the same. It's exact same chart. So what this tells you is there is a direct positive correlation between mortgage rate discounts, so getting a better deal on your mortgage, and the number of people in Canada who are using mortgage brokers. And I think that nothing speaks more powerfully to what we're doing and what mortgage brokers are doing than the numbers.
We're doing a show called Back to the Basics. We really want to reiterate the reasons to use a mortgage broker, but we're also welcoming your calls. Any kind of phone call, question you have, give us a shout, 416-872-1010, 416-872-1010. You can also text us at 71010. Sam is in Toronto today. Sam, good afternoon. What is your question?
Sam?
And of course, I'm having, there we go. Sam?
Yes, I'm here. Can you hear me?
Yes, we can.
Okay. So I own a fitness club in Toronto, and it's starting to do better now that the lockdown is lifted. But I just got myself in such a tough spot trying to navigate through it and get to this point. So I ended up taking a second mortgage at the beginning of the pandemic. And now I've went back to my bank and I've been trying to refinance because I have lots of equity, but they're telling me they won't touch me because I've missed a couple of mortgage payments, which I've made up right away, but just trying to keep all the balls in the air here. It's just been tough. Some months I make my payments, some months I'm a few days late or maybe a week late. I don't know. I just want to know, guys, is there anything I can do here? What do you think I should do?
Yeah, so definitely options out there. There's definitely options. We always like to say, when you go to your bank, the problem with going to your bank is that you're fitting in one box, right? And, we know that us as humans, we're all different. We all have different stories. We all come from different places. So, going to one spot to get one answer is rarely going to work out for you, like we had spoken about in the last segment. Especially in a situation where, there's missed mortgage payments. I'm assuming that you said you own a fitness club, like a gym?
Yes. A gym, yeah.
Okay. So I'm assuming that your income from the last couple years or the last year is probably not up to snuff. And that's not your fault, obviously. You know what I mean? So
Correct.
We can go, and there are programs that are available where we don't need the history that the banks need, which is like 2 years usually. We can just take the last 6 months of your income, which from what I understand, gyms have been open for the last 6 months. So there's probably some good revenue there, and we can use that to qualify the mortgage. And there is lenders absolutely out there that don't, that will give you a mortgage with missed mortgage payments on your credit bureau.
Yeah, listen, there are a couple of red flags that come up right away, right? Like you missed mortgage payments. So in order to get the best rate on your next mortgage and have the most number of options available to you, you probably don't want to show those missed mortgage payments. So you're always going to be weighing different options against each other. But one option here would be to clear out all of your debt into one mortgage for a bridge almost, and then refinance that bridge into a new first mortgage. That bridge would have no arrears, and it would probably get you the cash that you need to stabilize the credit. I don't know that gyms have been open for 6 months. And if they haven't been, you probably are going to want to show 6 months worth of history. But I can tell you that you're on the upswing. You've got equity in your house. you need to get rid of that second mortgage. And your bank's not going to help you because your bank is just looking at your GDS and your TDS requirements. Your bank probably also has lobbed a little bit of unsecured debt into you. So you might have a credit card right now. You might have a line of credit. You got to understand that you are not motivationally aligned with your bank. Your bank wants to earn higher interest rates on you, and they want you to pay more and more interest because that makes them more and more profitable. What you want is you want to have the absolute best credit rating that you can have. You want to have an income level that will be the minimum, technically, if you're self-employed, to support the debt that you have and still get you the lowest possible interest rate on that debt. You pay any more, if you pay yourself any more, you're going to pay more in tax. And if you pay yourself any less, you're going to be subjected to higher interest rates. So what I would say is get in touch and let's go through this. It's not totally simple because you've got a lot of options available to you. If you had no options or one option only, then it would be really simple, but it's not. And it's based on time and it's based on some of the kind of different attributes of your application. But this is the stuff we love doing.
All right, Sam?
Yeah, thank you very much. Can somebody call me after the show, please?
Yeah, absolutely. Absolutely. Ian will grab your information and we'll give you a show right away.
Shall do. I'll just put you on hold. Hang on just 1 second. For anyone else that wants to talk to them, their phone number after the show, 416-766-2666, 416-766-2666, and connect.ca is the website. Marcus, just before the break, you were talking about something that, I mean, I've been preaching for years now. Two things. One, it really got hit home to me. One of the employees by the big banks, we were talking about portfolios, and he said, do you honestly think that the banks have the kind of budget where they can go through everyone's portfolio, once or twice every month and make sure that they're getting the bases? It's just not feasible. He said, and the other thing is, like any store that, if they already have you as a customer, that they're going to invest the money in getting new customers and generating new business, and not necessarily in maintaining you, because they know that you're here to stay. And unfortunately, we hear it all the time on the phones. People assume for some reason, and have for as long as I've done money shows, that the banks have their absolute best interest at heart, always have and always will.
Yeah, it's the same report that I was just citing. Has a lot of real little golden nuggets, and we can send it out to whoever wants it after the show. But another thing that it says is that banks are okay to cut a little bit on their first interaction with you. So to get you in the door and do the first piece of business with you, they're willing to cut a little bit and be a little less profitable. But afterwards, as you continue to deal with them, they're also quite aware that you will stop negotiating and you will stop looking around. You're going to get really comfortable. Yeah. And when that happens, they make more and more money on you. You become more and more loyal. They increase pricing on you. So you can't just give up on the time you invest in your finances. And if you're someone that, doesn't immediately gravitate to negotiating things like your mortgage rate or your line of credit, then you need someone in your corner. Mm-hmm. I think Cannect is by far the best team you can have in your corner, but there are others. There's other great mortgage brokerages out there. Cannect just happens to be, something that we know so well. We've built our own technology to help Canadians analyze their debt. We are extremely proud of the time that we take with every single one of our borrowers, from the time that we first speak to them to, dealing with them on their third, fourth, fifth, sixth mortgage. So it just comes down to, you need to be armed with both information and an unbiased source of that information. And without that, you're going to be overpaying for all your financial products.
I was actually
with that, sorry, go ahead.
No, I was just sitting here and thinking as Marcus was speaking. I don't know. I can't count how many conversations I've had with people who were distraught at their cell phone providers or internet providers or TV like cable providers, and yeah. The conversation ended with, well, I gave them a call and I told them that I was going to leave and I got a better rate and but I've never had a conversation with somebody other than, of course, in the context of being here, that with somebody that said that they did that with their bank, and that's something that should be done more and more, right? So yeah, that's my 2 cents on that.
And I'm just checking the poll there, and unfortunately, it looks like Justin has a commanding lead when it comes to the most handsome Connect employee. Mind you, there's only 2 listed.
Thanks
to
for the
vote for
update
here,
there,
but,
Ian, because these
you
two
know.
aren't attached to their phone right now trying to follow each update in between commercials like fiends.
Yeah, I
I
noticed there's
had
quite a
no
few.
idea who was in the lead. It wasn't a cheerful moment at the commercial at all over here.
I mean, 60-40
Apparently-
isn't commanding, first of all. 60-40
It's
is not a
amazing.
commanding lead.
It's amazing
just
how
a
many
lead.
IP addresses share Justin's phone, though, for votes. It is interesting. David in Toronto, thanks for calling us at 416-872-1010. And what is your question? Hang on, I'm
looking
there
to
we go.
refinance
Sorry.
my mortgage and take out some equity. My current mortgage rate is 2.59%. Balance on it is $250K, and I'm looking to take out about $300,000 to make some investments, which I don't think should be a big problem. Based on the prices right now, my property should be worth at least $1.5 million. I've heard from friends that have used mortgage brokers before that they've had success, but I'm a little skeptical with getting like third parties involved. But from what I hear, sounds like you guys are the kind of company that can help. Are you guys able to?
I mean, yes, absolutely. First off, us or like Marcus was saying, picking a mortgage broker, is the best way to get ahead of the game in the mortgage market.
But for sure, us.
For sure, us. Let's not get this twisted. But absolutely, I have conversations with people all day that call us and have a lot of questions. Why would I be sending my information to this person? And I've never used a mortgage broker before. What is it going to cost me? Whatever the case is, when we really boil it down, a mortgage broker is in almost all cases, a free look into how we can save you the most amount of money and how we can take the stress of figuring out the best mortgage for you off of your plate, right?
Yeah, I mean, think about things like what's the total dollar amount that you can get? Is the dollar amount that you can pull out affected? Is the interest rate affected by how much you're going to pull out? Let's talk about whether you want a variable rate or a fixed rate. We just saw literally in the last week bond yields spike, indicating that we're probably going to see fixed rates increase. Maybe some advice around structuring a mortgage where a portion of it's variable and a portion of it's fixed. Maybe timing your mortgage, its payments, and its maturity with the investment that you're looking to make. It's really just so, like, first off, like Justin says, you get with a mortgage broker, you're going to get access to every single product in the market. But you're also, with the right mortgage broker, you're going to have someone listening to you and treating your mortgage with the same time and respect that someone's treating your investment with, hopefully. And in the end, all of that advice is free. And it's all designed to make this transaction the best transaction it can be for you. So, the more well-informed you are, the more well-informed the mortgage broker is, the better off you're going to do. Mm-hmm. So I would definitely say use a mortgage broker. And if you're going to just one financial institution, if you're just going to your bank, we already know that your bank is not going to get you the best interest rate. They're going to do what is best for them, not what is best for you. So for sure, we can help. And I'm sure that we could probably, as we dive into it, there's probably questions that we can ask that will identify things that you might not have thought of yet that will help you 3, 5, 10 years down the road on this, on the journey that you're making to make this investment.
I was just about to say, David, I won't pry into you personally, but every time I jump onto the phone with somebody, my first question to them always is, what are you trying to do? Because if you're like you say you're looking to invest, my next question is, what are you looking to invest in? What's that return that you're hoping to get? And let's try to get you into the lowest rate to borrow. If you're borrowing money at 5-6%, it doesn't make sense to invest it at 5-6%. If I can get you a variable rate 1%, or between 1 and 2, and you invest that somewhere between 6 and 7, 8%, you're laughing. That's the difference in trying to understand what your goal is and where you want to be, and at the end of your mortgage, that's where we're going to try to put you. If you say you have lots of equity, you make a few phone calls, somebody's going to offer you a home equity loan, somebody's going to offer to refinance, but do they hit your goal? Getting a deal done is what a lot of mortgage brokers are trying to do. We're trying to listen to you and find a solution. That's the difference.
All right. Well, thank you very much. I'll give you guys a call next week then.
All right.
There we go,
Thanks a lot.
David.
Thank you.
Thank you very much for your call. And if you'd like to follow up, obviously give them a call, please, at 416-766-2666, 416-766-2666. We are kind of getting back to the basics here on, what does a mortgage broker do? One of the things that I discovered about you guys earlier, and I actually asked on air because I wanted to make sure I understood it, was that compared to the bank, if I get in touch with Cannect, you have an end game in sight. You're interested in the exit plan. It's not this ongoing, 25 years down the line, and I'm still trying to pay this off. What you want to work toward is, how are we going to end this? How are you going to, get the money paid back and move on with your life, which is far from what happens when you walk into the bank and say, can I borrow $50,000?
Our goal is constantly moving our borrowers to lower cost capital. That's it. Right? So it's every the way that the business is structured, the way that our technology is structured, the way that our interactions with our borrowers are, it's always maximizing the efficiency of that mortgage. So, and it's not necessarily just to pay it off faster, because different people have different motivations. It is to reduce the interest rate. It is to reduce the debt servicing payments sometimes, to increase an equity takeout while still managing those debt payments. It is to absorb higher interest rate debt into the mortgage, but it's constant, right? Things are dynamic, right? They're constantly changing. So if over COVID you increased your unsecured debt and it's time to include some of that unsecured debt into the mortgage, how do we do that? How do we reduce debt servicing payments? If, like the last caller, you're looking to make investments, what's the most efficient way to utilize the debt that we can pull out of your home, the equity from your home, to make that investment? It's a really, that's a tax efficient way to make investments. A lot of people don't know, but you can deduct the interest of your mortgage against the return that you're generating on what you're using that money for. So there's tax efficiencies at play. There's a lot of strategy involved in how to use your mortgage. Listen, your mortgage is the largest piece of debt you're ever going to have. Your house, in almost all cases, is the biggest asset you're going to have. So maximizing the efficiency as to how you use that asset and the debt on that asset can be so powerful as to almost create another income for you and your family if it's done properly. And if it's done improperly, well, then it'll just create another income for the banks.
I'm sure I haven't been able to check on the votes.
The lead's climbing.
It is climbing.
The lead is
And,
climbing.
Yeah, but he
Justin-
honestly, during the break, he's on his phone calling everybody. You know what I'm doing? I'm looking at bond yields so I can inform our listeners of what they should be doing with their mortgages. And Justin's literally, I think his girlfriend or his fiance and his mom are like dialing for dollars here, calling everybody to vote for him.
For anyone listening, this is the first show we've done where they decided to, bring a poll into the show. And when they stopped Matthew from dancing on it, they decided to pick who that most what is it? How's the question phrased? I don't want to.
Who's best dressed today?
Best looking. I think.
Who's best dressed?
Best
today?
looking?
There you go.
Oh, okay. Who looks better
Who looks
today?
better today is the question.
They're both pretty sharp in here looking today. I've been told that I'm not allowed to put myself on camera, so that's one thing.
Yeah.
Hey, Matthew.
Yes.
Matthew, if you had to vote, which one would you vote for?
I did make a vote, but I can't remember which one I went for.
He's
So,
lying. He's lying. He voted for who signs his checks. That's what's going on here.
As I would too, just for the record. 416-872-1010. If you have any questions about mortgages or men's fashion, apparently, for that matter. We're getting back to basics here. And I think there's a lot of people out there have no clue that there's a difference between, a mortgage broker and a bank. And I guess, is it fair to compare it to the insurance industry where if you decide to pick up the phone and go to an insurance company as opposed to a broker, you're kind of limiting yourself to an awful lot of options and some great pricing that might be available.
Even more so, I think, in this case, because there's so many mortgage lenders in Canada, mortgage finance companies that have extremely competitive interest rates that have no direct to consumer channel. So, whereas there are some direct to consumer insurance companies that also sell through brokers, in the case of mortgages, you're eliminating a lot of options for yourself. And the other difference is with mortgages, there's so many different variables on every product type, on what qualifies you. Like we said this before, in Canada, you do not need a mortgage broker's license to sell mortgages at a bank. You do not need a license to advise Canadian consumers on their mortgage if you work at a bank.
Wow.
But if you're a mortgage broker, not only do you need a license with continuing education, depending on which brokerage you work at, and here at Cannect, it's twice weekly, we are learning about new products, how products change. Like, think about this. There's 3 different mortgage insurers in Canada. 3 different companies, not just CMHC that insures mortgages for Canadians, right? There's 3 different insurance companies. All those insurance companies have different guidelines, different underwriting criteria, different rules. And there's another 60 mortgage lenders that feed information and deal flow into those insurance providers.
That's another thing. I think the number's actually gone up to 75 now, but it's like, how does anybody vet that? 60,
Right.
60, like what's the difference between 60 and 75?
Let's face it, there's probably like 30 that we're going to use, but
Yeah.
So, and then the other thing I want to touch on, because I know we're going to be tight on time like we always are, is you spoke about, we had a text message about somebody that said the banks are increasing rates. So yes, the banks are increasing mortgage rates. We will see mortgage rates, fixed rate mortgages increase. And Matt, if you put this up on the screen, just while we're talking about it, I'm going to put up the Government of Canada 5-year bond yield. So there is a direct relationship between the Government of Canada 5-year bond yield and mortgage rates. The 5-year fixed rate mortgage rate is typically priced off of the Government of Canada 5-year bond yield. So over the last 15 days, we saw bond yields spike a considerable amount, like 20 basis points, which is a lot, 0.2%, especially when they're going from, 0.8%, 0.85% to where they are right now. They've closed on Friday at like 1.07. So that increase means we're very likely to see an increase in fixed rates. So Canadians should understand that the relationship between a bond yield, namely the Government of Canada's bond yield, and our mortgage rates is really simple. When bond yields increase, it means that mortgage rates are going to increase, and it means that we're going to see something happen probably within the next couple of weeks. The only thing that will prevent this, because there is still a give and take relationship, is if we see weakness in the market, then that bond yield rate will pull back. And if the bond yield rate pulls back, then it's unlikely that we'll see mortgage rates increase. So if we see economic strength on the horizon, then bond yields will increase. And if bond yields increase, then mortgage rates will increase. But because of, like we were talking about, this give and take relationship, when the central bank, or when the market, because of the central bank, intimates that interest rates are going to rise or bond yields do increase, we see a pullback in the stock market. And that pullback has a direct effect on the bond yields. So it's a bit of a circular effect that happens. It's kind of like when you hear Jerome Powell, the chairman of the Federal Reserve in the United States, say, we're going to start pulling stimulus back and we're going to look to increase interest rates. The market gets scared and the market pulls back. So if we do see a correction in the market, which a lot of people are calling for, and they should probably be talking about this on the show before us. But anyways, if we do see a pullback, then that pullback will then result in decreasing interest rates. So for Canadians that are rushing to lock in a fixed rate right now, don't speak to somebody first, because there's still a give and take relationship in this. There's still it's not a certainty, right? Like if we see more of the central bankers intimate that interest rates are going to increase, then we see a correction in the market, then interest rates will not increase. And what I don't want to have happen is I don't want people stuck in 5-year fixed rate mortgages, because 75% of Canadians break their mortgage before the maturity. A 5-year fixed rate mortgage, if it is taken from a bank, has a humongous penalty. And if you are just speaking to your bank about what type of mortgage you should get, and all of the news headlines tell you should take a 5-year fixed rate, the bank is licking their chops at the prospect of you taking that 5-year fixed rate mortgage. And trust me, we've seen penalties approaching hundreds of thousands of dollars, like 6-figure mortgage penalties. And with a penalty like that, you can't sell your house. You can't get a new mortgage.
No.
You are tied to that product. So just be careful. You need unbiased advice when you're doing any of this stuff. A variable rate mortgage comes with a penalty that's equal to 3 months worth of interest. A 5-year fixed rate mortgage should have that same penalty, but if it's done through one of the banks, you might be in trouble. So
guys, I am in trouble. I'm up against the wall here time-wise. So I want to say thank you. I'm tempted to do a poll update, but in all fairness, I think that, if you tune in to CHCH next Saturday morning at 8:30, then you will see the final results, and that's probably a lot fairer for.
And don't forget, if you want to check out any of our old episodes, if you want to check out any of our old episodes, go out to YouTube or MakeMoneyCount.com. MakeMoneyCount.com, our brand new website. If you want to go there, MakeMoneyCount.com to find out all of our old episodes and podcasts.
And visit Cannect.ca, Connect with an A, or give them a shout, 416-766-2666.